What is going on, you guys, and welcome back to another video. If you're new to the channel here, my name is Brandon. As always, we do have our Investing Academy as that first link down in the description below. Today's video, we are going over two stocks to buy right now. I am loving these selections. They're both dividend stocks, and they are both dividend growth stocks. Companies that are actively increasing the dividends, and in my opinion, they're trading at some very, very fair prices. I actually own both of the stocks that we are talking about today. First one's the new edition, second one I've owned for a number of years. First and foremost, give this video a thumbs up. As always, do your own research and due diligence. But in getting into stock number one, it is the company BlackRock, ticker BLK. Today, the shares are trading at $700 USD, and they have a very nice starting yield up at 2.78%. I will just give a shout out to one of our students, the Brave Beagle, who did bring the stock to my attention. I've been, BlackRock's been kind of floating around there, but never one that I look into too heavily. Well, I'll tell you guys, after doing some research over the past few days, I am very, very much liking what I'm seeing right now. BlackRock, if you're not familiar, is the largest asset manager in the world. Just in the last video, we talked about CI Direct, right? A Canadian selection. Maybe draw a comparable here, but these two are just on completely different playing fields. And again, I said in that last video, CI was probably not the stock for me, despite it being Canadian. Well, BlackRock was what I ended up diving into. This company is pretty wild when you look at their most recent report. This number that I have highlighted reads 9.5 trillion with a T. That's how much money they have in assets under management. In fact, for some actual more up-to-date numbers, it's actually more like 10 trillion. But this company does absolutely everything. ETFs, active management products, fixed income, you name it. They serve both retail and institutional. And you guys have probably heard on multiple occasions, if you've been following the channel for quite some time, a lot of my favorite funds, a lot of my favorite ETFs that I've covered in my ETF videos, honestly, it comes down to either Vanguard or iShares. And iShares by BlackRock, that does fall under, of course, the BlackRock family. That's just one example. Now, why I like this stock so much really comes down to the price. It comes down to the sell-off. And I think that right now we are looking at a opportunity to start nibbling and building a position in this stock. So basically, year to date, the shares are down about 28% off highs. PE ratio is currently sitting at a 17.63, which is not necessarily low, but when comparing against itself, this is about the lowest that we've seen with BlackRock trading in the past 5 years. Of course, lower than their 5-year average in that case. To me, why I really like this stock is it is an amazing dividend growth story. And I love dividend growth investing. Here we see just year after year after year increases, more payments, more cash being delivered back to us as shareholders. Today, after this drop, shares are yielding. They're starting at about a 2.78% yield. But the two numbers that do jump out to me in this one is the 18-year history of increases. So not just paying dividends, but increasing them. And the 13% 5-year compound annual growth rate of this dividend, meaning that over the past 5 years, this dividend has grown at an average of 13%, all doing so with a very, very manageable payout ratio. If we took a look at both Tip Ranks and Morningstar, just a couple of our Wall Street analyst targets or projections that they put out. In both cases, they are suggesting about a 25/26% upside. At the end of the day, this is a company that I just think is a force to be reckoned with. It is an absolute beast in terms of size, in terms of their position in the market. It's times like these where I believe patient investors can just kind of swoop in, just take advantage of these deals, buy the income, buy the yield, by the potential capital appreciation, because not only are you getting the reliable dividend with the track record and the history of increases, as analysts are projecting, the stock does look to be undervalued. So today, trading at $700, our first stock is BlackRock. And again, I actually just added this stock quite recently to my own portfolio. Now, before we move on into stock number two, I do just want to say a quick thank you once again to Passiv for sponsoring today's video. This is honestly one of my favorite free tools out there when it comes to just keeping track of your portfolio. It is completely free to use. If you are a Questra user, you even get a bonus. You get their premium feature, all at no cost. When you're looking to keep your portfolio on autopilot, when you're looking for tools to help you rebalance, I would say look no further than Passiv. There is a link down in the description below, which will let you know that I sent you, but thank you to Passiv for sponsoring today's video. Now back to the video. Moving on into stock number two for today's video. This is one that I have covered on the channel here and there, scattered over the past. It's a stock that I own in my portfolio, and it's another great dividend growth stock. It is the company FedEx, ticker FDX. Today, the shares are trading for $209 USD. Again, American stock, as you probably may expect. Smaller dividend, 1.43%. This is another stock that has sold off actually more than BlackRock. The shares are down over 30% over the past year alone. I've been a shareholder of FedEx for a number of years now, and it really boggles my mind actually how volatile this company is. Like, it does go for quite some rides and some pretty significant swings. And, just taking a look at what you're looking at on the screen, maybe not for the faint of heart. That said, it's a stock that I do believe I will hold for decades to come, and it's a stock that I will continue adding on into the lows. We really don't need to go over an overview of FedEx. We are all familiar with them. They ship packages pretty much all over the world, by air, by ground. Why I personally like the stock is honestly quite a simple answer. Although this company is constantly getting threats, like if you follow FedEx, you're constantly hearing that they are going to be irrelevant with time and that there's competition and better choices out there. And, they're losing contracts left, right, and center. Like, you always will hear that. And I've heard that over the past number of years. But just in general, this entire space, whatever company you are looking at, is benefiting from a massive, massive natural tailwind. There's a massive push that is just hoisting up this company over the long run that I don't see changing anytime soon. I don't know about you guys, but literally on a monthly basis, we get a number of packages from FedEx, like whatever it is, maybe UPS or FedEx, but FedEx just happens to come to my house all the time. Well, that is absolutely the case going around the world. And we've all seen the numbers when it comes to e-commerce and the preferences of shopping, and people just, the consumption habits are just going this route. This is going to be an ongoing and like boosting up benefit for this entire industry. Why the stock, I believe, has sold off. There could be a variety of reasons as the whole market is selling off, but let's put it simply, this company is one that would not be a beautiful hold during a recessionary time. Like, FedEx is probably one of the more sensitive companies to a recession, to a drop in spending, to a drop in consumption. That all absolutely ties in and very likely could be playing towards this 30% drop that we're seeing, right? It's very logical for a company like this to be one of the first hit, and again, very logically so. I'm not here to argue that. For me though, however, and again, this is just my opinion with the stock FedEx, this is going to be a multi-decade hold for me, really. Multiple years out, like at least 10 years out. And during these periods of times, there are going to be good times, there are going to be bad times. Like, the economy will go through its cycles, as it always will. And to me, it's just more or less, I'm going to be looking to add this stock when the opportunities present themselves. I'll add on lows when the prices are looking cheap. At this current time, I do believe that is the case, because when I compare up against the industry peers, well, really, I'm looking at FedEx. You could look at others, UPS. For me, I like to compare these two apples to apples. It is cheaper pretty much across all major valuation metrics. They're sitting today at a 0.6 price to sales. 0.6, which is a bit wowing to kind of think about. Price to book, price to earnings are both significantly lower, again, when compared against UPS. One downfall we could say is the dividend, as we do see a lower dividend. This is true. However, as I'm sure you can assume from the title of this video, they are actively growing this dividend. Today, the yield sits at 1.44%. This is about a $3 payout in dollars. Again, nothing too crazy, but again, you have a very nice double-digit growth rate and a very low payout ratio to boot. This could signify that there is a lot more room and a lot more time to grow this dividend over time. One thing you may point out on this chart is you may say, well, look at the growth streak. This is weak, right? Only a 1-year growth streak. And yes, I think that is true. But what I would say is, let's just take it a step deeper. Let's just kind of make sure we know what we're looking at. Technically, they do have a 1-year growth streak, but if you do kind of chalk the COVID years aside, if we just looked at COVID years where they did kind of pause the growth of their dividend, it remains steady at 65 cents per quarter, they really have been growing the dividend quite well and growing it quite rapidly. And as with any dividend stock, whether it's FedEx, whether it's BlackRock, or whether it's a number of other dividend stocks that are actively growing the dividends, if you come in with a long-term approach, if you are an investor that is willing to kind of give the stock the time to let these dividends compound, let these cash flow payments just grow and grow and grow, you can be earning multiple times more down the road. And again, that applies for any dividend stock, but especially one that, in my opinion, is going to be around for the long haul, which I do firmly believe FedEx is. So at the end of the day, guys, could this stock drop further? Absolutely. So let me be clear on that. Like, is this the bottom? Who knows? And I could say the same with the entire market, but the metrics today are suggesting to me that we are paying a fair price Meanwhile, they're going to be growing the dividend, assuming all stays good. I'm happy to own these shares today, trading at around $200. And again, I think that it is a buy. But those are my 2 dividend growth stocks to buy for today's video. I hope you guys enjoyed. I hope you guys like the selection of stocks that I've included today. If you did, you can feel free to leave a big thumbs up. That is a great way of showing me that you appreciate this type of content. I am genuinely curious, like, do you guys like the stocks? Do you not like the stocks? Are there better selections out there? Leave a comment down below because I do read them all. Like I said, BlackRock is the stock for me at the moment because I added it. I haven't personally added to FedEx, but again, it's in that range where I'm very closely monitoring it. I do think both stocks are trading at a fair price right now, but I'd love to hear your opinions down below. If you are not already subscribed to the channel, take a moment and subscribe, hit the bell for notifications. You have to hit the bell so that they notify you, but we're going to be posting a lot of videos over the coming little while because yeah, we actually got a collab video lined up with Adam. He's coming into the office tomorrow morning, which is going to be great. We have some major progressions with our platform that we are building, which is the Investing Academy, and is that first link down below. It is literally $19.99 a month, and you get 100+ hours of courses and training and a community and trade calls, now newsletters and research reports. It is just beyond wild. And I'm sure I'll be talking more about this with time, but yeah, if you didn't catch the announcement, we've partnered up with Nolan Matthias. I probably should know how to say that, but yeah, very excited for what's to come with that and the 2 real estate related programs that he's going to be integrating into the platform for first-time home buyers, for getting a better mortgage or something along the lines of that. Again, I'll be learning so much watching those videos myself. We're even working with stocktrades.ca, which is one of the largest Canadian stock pick services. They're a blog that gets millions of views. They are actually quite massive. I've been chit-chatting back and forth with the team over there, Dan in particular, and they're putting together some stuff for us, a newsletter, research reports, even a course on NFTs, non-fungible tokens, which is, again, a field that I have so much to learn about, but I had a sneak peek at what they're building over there, and it is so, so exciting. These are all going to be integrated over the coming months into the platform to complement all of the other stuff. So, geez, I feel like I'm saying the same thing over and over again, but I say it because I really, really encourage you guys to check it out. Like, legitimately, check it out. If you hate it, you hate it. Then just cancel. Or even within 7 days, ask for a refund. Like, you can learn all about that on our website. But it's seriously a price that I think is very much worth investing in yourself. Really. Like, it's as simple as that. I promise you there is something in there, some piece of training that can help you make significantly more than the cost of the program. But, yeah, that's that first link down below. I hope you guys enjoyed today's video. As always, I thank you for watching, and I'll see you in the next one.